Financial Express Editorial Analysis, October 19, 2020. Today's editorial is GDP growth will fix debt, so spend now. Why government should spend? Where to spend? What are the consequences of not spending? We will find answer to these questions in this editorial. The gist of the editorial is those arguing for containing deficits, debt, don't realize these will rise anyway when pumps shut down and GDP starts to slow. Now, coming to the editorial, we will discuss some final points of the editorial that are more relevant for understanding should government go for spending. Those advocating Finance Minister Nirmala Sitharaman should not spend too much more to stimulate the economy as this will raise both deficits and debt are positing a false alternative. Positing means putting forward assumption, stating those advocating Finance Minister Nirmala Sitharaman should not spend too much more to stimulate the economy as this will raise both deficits and debt are positing a false alternative. While they warn the likely jump in bond yields as the center borrows more will raise costs and so depress India in corporations investment, this assumes that were the finance minister to restrict spending, neither debt nor deficit will rise. In a fundamental sense, the real issue is about the damage to the economy if the finance minister does not spend enough. This will take the shape of millions of pumps shutting shop and that in turn will depress GDP revival. That is what the latest IMF report calls scaring. How much the economy has got scared already is difficult to estimate, but there are ways to try and approximate the damage. Now the answer to the question where government should spend. But and here is the next question. Even if the government spends, what does it spend on? Apart from the fact that there could be much higher cash transfers to the poor and greater bank recapitalization, especially with more non-performing assets piling up, most suggest a bigger infrastructure rollout. The latter sounds good, but there aren't too many ready to roll out infrastructure projects right now. And why would firms, for instance, invest in new power plants while the state electricity boards are too broke to even pay their dues on time? One quick way, though, is to extend concessions to sectors that have the ability to invest immediately. Slashing spectrum prices, either for 4G or 5G, could result in large expenditure, around $15-16 billion for each operator over 2 to 3 years in the case of 5G. Abolishing, abolishing license spectrum charges would also stimulate capital expenditure immediately. Sharply reducing levies on oil and gas or allowing market prices to be charged for all production, not just the new ones, would give pumps enough cash to be able to invest quickly in new fields or to simply ramp up existing production. Selling PSUs would have the same impact. Just see what Vedanta did to raise SZL's investment and output to understand this. The short point is India needs to spend a lot more if it wants to fix the permanent damage to the economy that will occur if lakhs of producer pumps shut down. When this happens, it will both raise deficit debt levels and even be inflationary as supply chains break down. As it happens, the balance of payment surplus presents a golden opportunity to keep the cost down for an expansionary fiscal policy. Given this, it is not clear why the government is hesitating. So the talisman suggested in this editorial is GDP growth will fix debt, so spend now. So it is the time for the government to spend, and where it has to spend, it has been spelled out in this editorial. That's all for today. Thanks for listening.